Our next speaker is going to be Mr. Craig Phillips, who's a counselor to the Secretary of U.S. Department of Treasury. If you recollect, last May when we met, our theme was, "Are you ready?" And Mr. Phillips urged us to, all of us to get ready, and so far what we have seen through the day, everyone seems to be getting there. So with 90 days, 8 hours and 12 minutes left for the to go live, I thought we'll get him back and hear from him as to how he sees the market and the preparedness as well as the importance of single security. While most of you don't need an introduction, still we thought for those of you who are going to hear him for the first time, we'll give you a brief introduction. Mr. Phillips joined the Treasury Department in January of 2017 and serves as a counselor to the Treasury Secretary. He assists the Secretary in a range of matters including domestic finance, domestic financial institution policy, housing finance policy, and regulatory reform. So he's in thick of everything we deal with. Between 2008 and 17, Mr. Phillips served as a managing director and member of the Global Operating Committee with BlackRock Inc. Mr. Phillips was the global head of financial markets advisory group at BlackRock Solutions. Before that, prior to that, he held senior leadership positions in Morgan Stanley as well as Credit Suisse First Boston, where he managed global securitized product platforms. Mr. Phillips holds a BA in Economics and Business Administration from Vanderbilt University. So please welcome Mr. Phillips.
Well, good. Thank you very much for having me. That introduction was almost longer than I'm going to talk because I have a very simple message, which is really just to thank everyone for making this huge initiative a high priority. All of you are representing end investors, broker-dealers, data and service providers, and market infrastructure players, all of which have come together to get us to where we are today. Given the depth of the importance of the mortgage market to the U.S. public and to our capital markets, Treasury has a tremendous interest in providing any support we can to the uniform launch of the UMBS. As I've indicated starting last summer, through a policy process, Treasury and the administration are very supportive of this initiative to create a single security and a more unified liquid mortgage-backed security market. Now, I must say, last summer when we had this, first of all, the Trump administration wants to grow jobs, and now this is twice as big as it was a year ago, so that part of the plan is working. You got a lot of people are here. But also, there was a lot of work to be done, and honestly, I was a little nervous about it once we went over the whole context of everything that had to be done. And I must say it's incredible that all of you put the effort in, but I'd also be remiss to not acknowledge a few other commitments. First of all, at the FHFA, Bob Ryan, Robert Fishman, and Liz Schultz, among many others, have tirelessly worked on the policy side of this and helped guide the GSEs. A huge team at both Fannie Mae and Freddie Mac have been involved to get us here today. And of course, incredible underlying technology has been driven by the CSS platform and those professionals themselves. So everyone on the official sector side should be very proud of this accomplishment. The single security represents an important opportunity to accomplish policy goals that we think will help the market, borrowers, as well as taxpayers. By making Freddie Mac and Fannie Mae securities fungible in the TBA market, we have the opportunity to establish and maintain a single, deeper, and more liquid market for mortgage-backed securities that they issue. And this market is not only good for investors that trade these securities and invest in them on behalf of their customers, but also benefit borrowers and the U.S. public in the form of lower, more predictable interest rates. The UMBS is also going to create more flexibility for the customization at the resecuritization level. Presently, you can only aggregate within each enterprise's securities, and now investors will be able to commingle the UMBS issued by either GSE. This also will further improve liquidity and the option of customization. Also, we believe that the security will reduce the cost to Freddie Mac and therefore taxpayers by eliminating the historic difference in liquidity and other pricing patterns between Fannie Mae and Freddie Mac securities. So from the point of view of success, obviously having the benefits spread to the TBA market and the final decision to have these become eligible for TBA delivery will be something that we look forward to, and this deeper liquidity will benefit millions of homeowners. Since last year, there were quite a number of regulatory questions that had to be answered, and I know while there continues to be a process of working through these changes, all of those deadlines were met. First of all, the SEC finished several criteria that were required on their part. I think they were probably first to be done. Then there was some important elements inside Treasury, where the IRS is inside Treasury. The first was the exchange treatment. So guidance was needed for Freddie Mac security investors on the tax implications of converting a PC to a UMBS. In September of 2018, the IRS issued Revenue Ruling 2018-24 that determined that the exchange would not constitute a taxable exchange, which was a really important criteria, I know important to investors of asset managers in particular. Also, there was further clarification around the nature of float compensation as a tax-free reduction to the security basis. These were large tax policy decisions, not so much that the decision about the security was difficult, but whenever they do a ruling, they need to make sure that it doesn't have some unintended consequence with another aspect of the market. Now, I must say the IRS did not rule on the taxability of the payment that you would receive in the float compensation. And I have it underlined here to say that participants are advised to consult with their tax experts to determine how to treat the float compensation. The second big element was Rule 817H, which are certain insurance company and pension fund vehicles that need clarity on concentration limits. It does not represent a huge percentage of the market, but it's a very important segment that asset managers in particular need to serve. So on October 16, 2018, the IRS published Revenue Procedure 2018-54, which gave guidance for taxpayers subject to the diversification requirements under Section 817H. It really allows taxpayers to elect to treat the MBS they receive from TBAs as being a deemed issuance or the standard ratio of the two enterprises. There's further clarification underway to make sure that regulation and its interpretation are as clear and as usable as possible. I won't go on to too much of the detail of the exchange process, but I know there's been incredible effort as to how we go live between now and June to accommodate holders of securities. We're particularly interested in non-US holders and others that are sort of less close to the axis of all this to make sure that they're comfortable in those steps. I know that's been a topic talked about today extensively. And finally, the float compensation is a tool that will allow investors to calculate the compensation for float based on the most recent Freddie Mac incentive grid price, and this float compensation would calculate on a fair market value in a precise and consistent method. So overall, I feel really good about the launch, looking towards June, and these were large steps that we had to get right to get here to today. The last and final issue that we took a tremendous amount of interest in was the issue of prepayments and make sure that the incentives and the process of alignment and monitoring was adequate. And the industry through SIFMA and others have made a very large contribution to this dialogue, and at Treasury we're happy with the result. First of all, the FHA took action to address this, first of all by having more transparency and disclosure to not jeopardize the nature of the investors' understanding of these issues. So starting all the way back in the first quarter of 2018, FHA published its first prepayment monitoring report, and they've continued to publish these quarterly, which include aggregating third-party data to demonstrate the alignment and current variances in that alignment in the prepayment speeds on the GSE TBA eligible securities. Based on industry feedback and something that was hot and heavy last summer, there was the decision to further codify FHA's oversight of the enterprises and by extension oversight of the servicing process and the originator process to assure that alignment will be maintained. So a rule was published to promote this alignment. Just last week, following a comment period, a final rule has been put forward, and that final rule represents substantial and very high quality industry feedback. So it really facilitates FHA's exercise of its broad authority as regulator, as well as its authority in conservatorship. A lot of concern was that this would not be a unified process between conservatorship and possibly exiting conservatorship if we accomplish housing reform, and I think the rule is set out accomplishes the goals. So I think really the nature of how the private sector has worked with the FHFA and the FHA delivery of the final rule and alignment is a last really critical step. I know that there's still work being done among all of you, so I again applaud you for being here today. I know it's a really large commitment to represent your organizations. I know other questions may come out of today, and I know at the FHFA and Fannie and Freddie, they stand by to help facilitate it. At this point, it's largely a private sector solution in the sense that all the tremendous investors and vendors are here to really show you what they've done to make you feel comfortable about the environment you're operating in. So I think going forward, it's really critical that lenders, market, utilities, dealers, investors are ready. So hopefully you identify anything today that is a gap and help your organization address it. We believe truly that the single security is agnostic to housing finance reform. We'd like to get on with that and see an end to the conservatorships, but we think this is a tool or a process that really is additive to that objective, and it certainly doesn't detract from it or obligate us to any path. We think the original objective to have a single liquid market for MBS will prove to be a great decision. And as I said, the administration unambiguously supports this. So I want to again thank everyone for the tremendous work. We're confident the end result will be as planned, and we look forward to working with the FHA and the enterprises to support the smooth transition next quarter. So thank you for being here, and thank you for your commitment.